Customer Price Index, June 2022.
The Consumer Price Index for all urban consumers, CPI-U, expanded 1.3% in June on a occasionally changed premise subsequent to rising 1% in May, the U.S. Department of Labor Statistics revealed today. Throughout recent months, the All Things record expanded 9.1% before occasional change. The increment was wide-based, with the records for gas, safe house, and food being the biggest. Patrons. The energy file rose 7.5% throughout the month and contributed almost 50% of the
All Things increment, with the fuel list rising 11.2% and the other significant part. Records additionally rising.
The food record rose 1% in June, as did the food at home list. The record for all things less food and energy rose 0.7% in June, in the wake of expanding 0.6%
in the previous 2 months.
While practically all significant part files expanded over the month, the biggest patrons were the files for cover, utilized vehicles and trucks, clinical consideration,
engine vehicle protection, and new vehicles.
The files for engine vehicle fix, clothing,
family goods and activities, and diversion likewise expanded in June. Among the couple of major
part files to decrease in June were dwelling away from home and carrier charges. The All Things record expanded 9.1% for the year finishing June, the biggest year
increment since the period finishing November 1981.
The All Things less food and energy file rose 5.9% throughout the course of recent months. The energy record rose 41.6% throughout the past year, the
biggest year increment since the period finishing April 1980.
The food record expanded 10.4% for the year finishing June, the biggest year increment since the period finishing
February 1981.
Food. The food record expanded 1% in June following a 1.2% increment the earlier month.
The record for food at home likewise rose 1% in June, the sixth continuous increment of any event. 1% in that record. 5 of the 6 significant supermarket nutrition class lists rose in June.
The record for other food at home rose 1.8%, with sharp expansions in the lists for spread. Furthermore, for sugar and desserts,
the file for grains and pastry shop items expanded 2.1% in June,
with the file for flour rising 5.3%. The dairy and related items file rose 1.7%. Over the course of the month, following a 2.9% expansion in May. The foods grown from the ground list expanded 0.7% in June in the wake of rising 0.6% in May.
The record for non-alcoholic refreshments rose 0.8% over the course of the month.
The main significant basic food item bunch
file to decrease in June was the record for meats, poultry, fish, and eggs, which fell 0.4%
over the course of the month as the records for hamburger and pork declined.
The food away from home file rose 0.9% in June subsequent to rising 0.7% in May.
The file for full health feasts rose 0.8% over the course of the month. The file for restricted assistance dinners expanded 0.7% in June, as it did in May. The food at home record rose 12.2% throughout recent months, the biggest year increment since the period finishing April 1979. Each of the 6 significant supermarket nutrition class records expanded over the range, with 5 of the 6 rising in excess of 10%.
The record for other food at home
expanded the most, rising 14.4%, with the record for spread and margarine expanding 26.3%. The leftover gatherings saw increments going from 8.1% leafy foods to
13.8% oats and bread kitchen items. The record for food away from home rose 7.7% over the course of the past year, the biggest year change since the period finishing November 1981. The record for full assistance feasts rose 8.9% over the
most recent year, and the file for restricted help feasts rose 7.4% throughout the past year. The all things less food and energy record rose 6% throughout the course of recent months. The energy record rose 34.6% over the course of the past year, the biggest year increment since the period finishing September 2005. The food file expanded 10.1% for the year finishing May, the primary increment of 10% or more since the period finishing March 1981. Costs for food at home rose 11.9% throughout recent months, the biggest year increment since the period finishing April 1979. Costs for food away from home rose 7.4% over the course of the past year, the biggest year change since the period finishing November 1981. Energy costs rose 34.6% throughout recent months.
Fuel costs expanded 48.7% over the range.
Power costs rose 12%, the biggest year increment since the period finishing August 2006. Costs for gaseous petrol expanded 30.2% throughout the course of recent months, the biggest such increment since the period finishing July 2008. Cover costs rose 5.5% throughout the past year, the biggest year increment since the period finishing February 1991.
Costs for family decorations and tasks expanded 8.9% throughout recent months.
Costs for new vehicles rose 12.6% and costs for utilized vehicles and trucks expanded 16.1% throughout the year, while costs for aircraft tolls rose 37.8%. The US Consumer Price Index, CPI, figures for June 2022 are supposed to be out today. The White House is anticipating that the June CPI numbers should be profoundly expanded. However, it accepts that the CPI information would be in reverse looking, as falling energy costs might have previously facilitated some expansion worries of Americans who were prior wrestled with a significant expansion in the expense of food and fuel.
High expansion numbers could prompt further financing cost climbs by the US Federal Reserve.
Yet again, crypto specialists accept that increased expansion numbers might send the crypto markets into a spiral because of Fed fixing fears. Nonetheless, assuming that the CPI numbers shock everybody with signs of US monetary cooling, crypto markets might observe a vertical development.
1. First worldwide crypto leads soon.
The Financial Stability Board, FSB, has said in an explanation that it will propose strong worldwide principles for digital currencies in October this year, news office Reuters revealed. The declaration comes after late strife in crypto markets, which featured the need to direct the speculative area. FSB is a collection of controllers, depository authorities and national financiers from the Group of 20, G20, economies.
2. Celsius pays obligation to Aave.
Upset crypto moneylender Celsius Network has completely taken care of its obligation on decentralized finance, DeFi, convention Aave, as per a CoinDesk report.
Celsius Network suspended withdrawals last month and cut positions. 3. Three Arrows fellow benefactors show up.
The missing fellow benefactors of bankrupt crypto mutual funds 3 Arrows Capital, 3AC, have at last ended their almost drawn-out quietness.
Shu Shu, a 3AC fellow benefactor, blamed the court-delegated vendors for goading.
Tragically, our pure intentions to help out the liquidators was met with goading. Trust that they practiced completely pure intentions. WRT, the Starkware token warrants, he tweeted.
Dollar crushes new 20-year highs on hot CPI.
Information from Cointelegraph Markets Pro and TradingView followed BTC/USD as it plunged under $19,000 minutes after the June CPI print, which put US
expansion at 9.1%.
Assumptions had inclined toward 8.8% CPI year-on-year, this actually being the most elevated perusing starting from the beginning of the 1980s. With expansion everything except ensuring further rate climbs from the Federal Reserve, the mindset among risk resources, including crypto, quickly went bad.
Top expansion is here with CPI coming in at 9.1%, Cointelegraph patron Michael Van de Poppy responded, adding that $19,500 ought to have held for BTC/USD to keep away from flowing south some more. ETH cost back focusing on 3 figures.
Altcoins, previously conforming to BTC before the CPI occasion, additionally surrendered ongoing increases.
Related. Ethereum cost chances bear banner breakdown, 20% drop against Bitcoin.
Prominent was ETH, which took steps to go underneath $1,000 interestingly since June 30th.
Markets brace for US CPI data release.
US Consumer Price Index (CPI) expansion information for June is booked for discharge at 12:30 GMT on Wednesday and, assuming last month's CPI information discharge is anything to go by, could cause ructions in digital money markets.
Merchants will review that the arrival of a more sweltering than anticipated May CPI report in mid-June at the time set off a breakdown in stock, bond, and cryptographic money costs.
That is on the grounds that the information constrained the U.S. Federal Reserve to speed up the speed of loan cost expands at its June strategy meeting to 75 bps from 50 bps at the gathering earlier. The Fed minutes from its June meeting last week affirmed that the national bank sped up the speed of rate climbs due to a crumbling in the close-term expansion standpoint and that the national bank is ready to execute another 50 or 75 bps rate climb at the forthcoming July meeting. Long-haul U.S. bond costs have now generally ascended back to slash over their levels in June before the auction prompting CPI information discharges bond financial backers cost in a more vulnerable U.S. monetary standpoint. In any case, stocks in crypto have not even close to recuperated back to pre-June CPI information discharge levels. Without a doubt, in spite of developing worries that the U.S. economy might be set out toward downturn and currency showcases that are evaluating in a series Fed rate cuts beginning in the last part of 2023, markets stayed zeroed in on the close-term standpoint for Fed strategy.
Wednesday's CPI information discharge is supposed by examiners to show the tidal YoY ascend in costs reach 8.8%, a new multi-decade high.
In the meantime, the tidal cost list is seen ascending more than 1% MOM for a second progressive month to reflect flooding gas costs. Assuming that the impending CPI information discharge shows a further speed increase of U.S. cost pressures, regardless of whether not exactly as intense as dreaded, that ought to keep the Fed on course to raise loan fees by a further 75 bps in the not-so-distant future. While the Fed has demonstrated that it is worried about a logjam in U.S. development, last week's June occupations and ISM Services PMI study information, both solid, will have facilitated fears about an impending downturn.
Drawback risks to crypto. All said, Wednesday's CPI information seems to introduce drawback dangers to digital money costs.
A potential gain expansion shock would bring about an increasing of Fed fixing wagers that would, similar to move in June, probably weigh vigorously on risk resources like stocks in crypto. A CPI report that generally prints in accordance with expected would show a further ascent in cost pressures and set assumptions for close-term Fed fixing. While late drawback in crypto costs since last Friday presumably mirrors that this is now being evaluated in somewhat, further disadvantage ought not be precluded. A major drawback shock would presumably be expected to support crypto. PCE expansion information, an elective U.S. expansion measure liked by the Fed, delivered in June half a month after the CPI information saw its center measure tumble to a 6-month low. This added to trusts that U.S. value tensions could have proactively crested. Brokers will accordingly be watching the center measurements in Wednesday's CPI report for additional proof of purported top expansion. The YoY pace of center cost increments is seen tumbling to its most reduced since January of 5.7%. Assuming that it comes in even lower, the business sectors might begin slowing down Fed fixing wagers for the near future and 2023.
Retail respite. While Wednesday's CPI information is likely going to reaffirm assumptions for quick close-term fixing from the Fed, some are confident that June U.S. retail sales information planned for discharge on Friday might contain proof of a cooling of customer interest.
Title retail sales are seen rising 0.8% MOM in June, as per a Reuters survey of financial experts. In the event that MOM title expansion comes in at 1.1% true to form, that suggests a 0.3% decrease in expansion-changed spending. That would stamp a second progressive month-to-month fall in genuine spending after expansion-changed retail deals fell 1.3% MOM in May.
Obviously, the U.S. purchaser is feeling the nibble of expansion.
That much will be obvious in the starter arrival of the July University of Michigan Consumer Sentiment Overview, likewise on Friday, as most would consider to be normal to show opinion tumbling to a new all-time low.
Many think that the ongoing enduring of U.S. customers is a proactive factor that the economy may be going into a close-term downturn.
On the off chance that the current week's information brings about a significant development of downturn wagers, the market might start slowing down Fed fixing wagers for late 2022/2023. That could offer digital forms of money some rest, regardless of whether feeling gets hit on Wednesday by hot CPI figures. One more gamble occasion to take note of this current week is the informal beginning of the U.S. profit season,
with various large U.S. retail banks announcing figures for Q2 in the last part of the week. Financial backers have been worrying about what debilitating development might mean for income and will hence be watching improvements intently. Any drawback in stocks on unfortunate profit could convert into shortcoming in crypto. Bitcoin at risk of breaking key support. Bitcoin is at present exchanging just shy of $20,000 and testing a key help trendline connecting the mid-June, late June, and early July lows. Should the current week's large-scale improvements cause a crumbling in crypto feeling and Bitcoin break beneath this upturn, it is in danger of quickly testing late June lows in the mid-$18,000s and possibly in any event, retesting yearly lows in the mid-$17,000s.